Eric, let's start with you. Let's talk about a ETF, an exchange traded fund. What exactly is the advantage to these ETFs versus, let's say, the Bitcoin Trust that Grayscale has, or some of the other kind of fund structures that are in the market?
Generally speaking, an ETF is probably the superior wrapper for just about everything. Obviously, you can do a lot on your own. If you do anything on your own, you could buy the S&P 500 stocks on your own. You could buy gold and store it on your own. There's nothing wrong with that. But this is a world where consumers like convenience. So you can log on to any exchange, buy the ETF. It has a 3-4 letter ticker. It trades on the public exchanges. It's been sort of allowed or approved by the SEC, so you have that kind of comfort. It has liquidity. You can trade it intraday, and in this case, there'll be options on it. That's very useful, helpful. So ETFs generally have just made it easy to democratize investing. GBTC has done all that. The problem with GBTC is it's not really an ETF. You cannot create and redeem shares on demand, which means ARB is not possible. And when ARB is not possible, you have a price deviating from the NAV. With ETFs, you can create and destroy shares whenever you want. Therefore, if the price gets away, you can ARB that. And then the price gets away, you can ARB it. So there's constant ARBing going on, keeping the price close to the underlying price of what it's tracking, which is what people want. I mean, that's at the end of the day, they get Bitcoin's volatile. They want something that tracks the price. That's it. That's the bottom line. And GBTC does not do that.
Got it. And James, when you think about, let's take GBTC, obviously it's traded at a massive premium at times, a massive discount. Is that really the big thing that people are going to drive interest to the ETFs, is the fact that the other publicly traded vehicles right now have those discounts and premiums, and so this won't, and that therefore will drive some of the inflows?
Yeah, I think that's definitely part of it. Right now, GBTC is trading at it's just about 18% discount to the NAV. So basically what Eric was talking about, in a typical ETF, you can exchange shares for the underlying on a daily basis. So that means if they're the same exact thing, you can always make sure that the price is worth exactly what it holds. With GBTC, you can't do that. So you can, right now the fund is closed, so you can't even create shares, and there is no redeeming of shares. So that whole mechanism of being able to take the delivery of the underlying just isn't possible. But again, it's trading at a discount to NAV right now. So if you wanted to buy GBTC and you were expecting it to convert to an ETF, that is a potential premium, if you will, in the returns that you can generate. But as Eric said, over the short term, GBTC tends to trade very closely to Bitcoin price, like over a day. Its correlation, its beta to the Bitcoin market is pretty close, but over the long term, it just breaks down. Because of those reasons. If you bought it at a huge premium, there was times where it's trading at 120% above what it was worth. So you were buying $50,000 Bitcoin when Bitcoin was actually trading at $20,000. So that's the problem. And there are issues with it, but we can get into the nuances of it. There are also going to be some issues with the futures ETFs as well. So you just kind of need to know the issues with both and understand the pros and cons.
I want to just add the number here. If you bought GBTC last year on this date, you would be trailing the price of Bitcoin by 160 percentage points. Now, there's times where you bought GBTC and it actually outperformed Bitcoin. The problem is you don't know. It's got a third element, and people generally don't like the third element. That's why closed-end funds have really not, that's an area of the market that's very much like GBTC, and they've been largely ignored for the ETF.
Okay, so let's talk about ETFs in general, right? We know gold ETF, GLD, massive impact on price. How do you guys think about just whatever the structure of the ETF ends up being? What do we anticipate that impact to be on the underlying kind of Bitcoin price, if any?
I can jump in here real quick. So I will say one thing. What GLD did is different from what this Bitcoin ETF is going to do. If you were a retail investor, you had no real way of getting access to gold back in the day. Like an ETF opened up in a completely new market. Right now, there's Coinbase, there's Gemini, there's FTX, everyone, people have access to Bitcoin. It's not basically democratizing the entire space. So I would say equating the impact of the ETF on the gold market to the Bitcoin market is probably a little far-fetched. It's a little bit much. Again, this is also futures, but it's definitely, no matter what people say it's like fake and paper Bitcoin, but really it is, you're buying Bitcoin. So any buying of this is going to be more demand on the actual underlying Bitcoin market in some way. And we can talk about margin requirements for futures, but the answer is that it's going to be positive, but it's not likely to be positive with new demand into the ETF, but it's not going to be the same impact that we saw with gold. And also gold, that was one of the best runs for gold that it launched right before, not long before the 2008 financial crash. Like there was a whole bunch of other situations going on there with gold.
Yeah, and I also think there's a lot of optimism baked into the run in Bitcoin that we've seen. So while a Bitcoin futures ETF in particular, because that isn't even like GLD, that's more like USO. And we know from history that things that track futures in the ETF market are largely generally ignored by advisors, which have 24 trillion in assets. That's the real giant pool of money that ETFs tend to tap into the most. But there's traders, and I think USO has attracted traders. This will attract traders. But I think the bigger issue here, and I think, we don't think there'll be, this won't be like some game changer. I saw a call that somebody from, I won't say who it is, but they thought that this ETF where the Bitcoin futures were taking 36 billion in flows in the first year. That seems very overly optimistic. I would say more like 4 or 5. Now, if it was ETF tracking spot Bitcoin, maybe we get to 30 billion, given what we saw at GBTC and up in Canada. But I still think for the futures one, the big news here is that it gives traders something to use. It will be used by traders. It definitely will. But it's what it represents is this slow start to the SEC getting comfortable with Bitcoin and crypto. You could see Ether. You could see the physical. You could see people who have active funds that do crypto picking inside an ETF, like an ARC. Down the road we go, and all of a sudden, now you're talking about real assets. But this particular launch probably isn't going to be like some big game changer asset-wise.